Thank you all for joining in. The webinar will begin shortly in the next few minutes. A very warm welcome to each and every investor gathered here for today's Q&A event. We have with us our Chief Investment Officer, Mr. Sunil Damania, on the panel. You could drop in your questions, any doubts you have on Markets Mojo or the current market situation in the chat box. Over to you, Mr. Sunil.
Very warm welcome, all of you. Today we have a question answer. Feel free to put any question that bothers you, whether it's on the economy, on the sector, on the stock specific. We'll be more than happy to answer all your questions. Okay. Before we begin this webinar, just a small disclaimer that this webinar is only for an education purpose. Whenever you invest in the equity market, it does take a little higher amount of risk, and past performance should not be construed as an indicator for the future returns. Having said that, some housekeeping question that Jason is there and he will pick up questions line by line. So do not post question repeatedly because it does disturb our moderator. It will get picked up. First come, first serve. That's one. Second thing, if you already answer that particular question, maybe on the sector, maybe on the economy, maybe on the company, please do not put it again because it will not appreciated by the others. So let's not bore the people with the answering the same question again and again on this webinar. And number three, a company score is anyway available on the Markets Mojo website. Sometimes my view may differ from what is available on the site. The very fact that you are asking me a question, I assume that you want my personal opinion. Sometimes my view may differ with Markets Mojo view. So you can pick and choose what suits you the best. Now, before I, yesterday someone asked me a question and I said I'll come back to you on that. The question was UPL. So someone asked me, it's not a Mojo Stock, but since someone asked us, it's my duty that we need to honor my commitment. So someone asked us, should you participate in the UPL buyback offer? We studied the UPL buyback offer. Now what has come as a little, this one is the buyback offer is only for 1,100 crore. The size of this company is near about 57,000 crore. So company is going to buy back only 2% of its total market cap. That's what the number is, number one. Number two, this buyback, the company is going to do to the open market purchase. So you don't have to do anything. You don't have to, there is nothing you can do basically because company will buy from the open market, whether it's you or someone else. And hence, even though the buyback price is 875, what does it mean is that company will buy up to 875, not necessarily that if you give sales in the buyback also in the open market, the company will buy at 875. They are going to buy the current market price also, but the purchase price will not go above 875. So if you are a shareholder, follow Markets Mojo advice and take a decision. You don't have to do any other action other than follow Markets Mojo advice because you will not be able to tender shares in the buyback. That's the thing. So I hope that makes it very clear cut. With this, just before we open this, we have a very massive discount scheme of as high as 63%. The price of Mojo Professional is only going at 21,000 for 2 years. In other words, you are paying less than near about 11,000 rupees per annum, which works out to less than 1,000 rupees per month, and less than near about 30 rupees for a day, which is just a peanuts to have a wealth creating formulas available for next 730 days for you. So I'll request my colleague Jason to please drop the link. And remember, this price is already available for the very limited period. So if you, and remember, 2022 is going to be extremely challenging. If you do not have a right financial advisor by your side, probability is very high that you will lose money. Forget about making money, you will lose money. And if you really want to preserve and expand your wealth, then Market Mojo is the right tool that will help you, right platform that will help you to create wealth and sustain wealth. So Jason, my request to you, please drop the link for the benefit of the investors and let's open the floor for question and answer. Over to you, Jason.
Sure, I'll drop the links. This first question by Mr. MD Yaya. Bharat Dynamics has appreciated 21% since becoming a Mojo stock. Can I buy this stock now or should I wait?
Sir, we continue to believe that Bharat Dynamics should do well. Yes, it has done well, extremely well. Even today, it was up by 6.24%. And sometimes, people do pass comments. Whenever you recommend any company, it only goes down. So it's a very happy to have this kind of question. Yes, we can definitely buy. We are also advising in our model portfolio also to the investors to buy this. The script has run up by almost 42, 43%. So my request to you, yes, you buy, do not buy at one go. You can stagger your buying in Bharat Dynamics.
Okay, so one of the anonymous attendees have asked this question. He said that, as promised, you would be also having a webinar on hydrogen and green energy, which you will be presenting to investors. Have you thought of scheduling this event?
Sorry.
A suggestion to keep a webinar on hydrogen and green energy. You have promised this before. Would you be keeping a webinar on this topic?
So what I did promise is about this electrical vehicle. I can't recollect that we did talk about hydrogen and this one. I think it's a little complex subject. Number one. Number two, it's evolving technology completely. Yes, we will do it now. Since you are suggesting, we'll definitely do it. So Jason, just remind me in case if I forget, when we make a schedule, let's do that.
Sure.
Can I just take one question if you don't
mind?
Abdul Rahman is saying, hi Sunil, I have been disappointed by your choices of stock selection. You spoke a lot about TI India, eClerx, LTTS, all are in vain. Sir, I don't understand why you believe that they are all in vain. Sir, if you really want to invest in equity market, you don't have to get too much caught up by the short-term volatility. And this replies not only to Abdul Rahman, those who are attending this webinar. Equity is market is all about non-linear returns. Sometimes some companies do underperform. I'll give you a very classical example. Sports, that company did not do well, and those were, I don't know, Mr. Abdul Rahman was attending that webinar at that time. We did mention, please have patience. And today it's one of the best performing stocks. So do not expect any company from day one to start creating wealth for yourself. Am I right? So it's a part and parcel. If you really want very steady kind of income, then I think you should be in the equity. You should not be in the equity market. You should be in a debt market. Equity market is all about volatility. Have patience and have courage. Having said that, Mr. Rahman, we will go wrong. We can go wrong. We will go wrong. But we will go wrong on a very few occasions and will go right in many times. And that's one of the reasons Marcus Mojo has been able to create wealth. So yes, sir, have patience. We continue to hold eClerx Tube investment in our model portfolio also. LTTS, we did advise investors to move out of that because the fall from high criteria got triggered and we advise exit from that company. But we continue to hold TI Indian eClerx and we are very confident it should do well. In fact, if my memory serves me, a tube investment was up by 3.5% today. And I don't know what is the eClerx, so let me see that. So it was down by 1% or so, but it remains a buy. Have patience. Don't expect linear returns from the equity market. And you'll be surprised. I don't know. Okay, 1 minute. Let me say. Okay, sometimes even some data also come as surprise to me. So let me share my screen.
Sure.
This is eClerx. In 1 month, it is up by 3.73%. Someone is getting disappointed when this clip is outperformed the broader market, which is only down by 2%. In 3 months, eClerx is up by 7.2 months. This one, I'll take only 1 month right now. It is outperformed, sir. It's up by 3 points. Now, do you expect that every day just to go up? So that's not possible. I'm afraid that's not possible.
Okay, moving to the next question. This is by Mr. Abhijit Parekh. He's given a list of stocks. Most of them are from the model portfolio itself, around 9 stocks. He said that he doesn't have the time to monitor this. Please let me know whether you would be providing your views on these stocks and whether you'll be providing any updates. Stocks such as Coforge, Oil India, Nalco, Hindalco, etc.
So Coforge, we have advised investors to move out from that. It's no longer a Mojo stock. Okay. So, sir, I think Mr. Parekh, I have a very easy solution for you. See, you want to invest in Mojo stock. Am I right? If I understood correctly, then I would suggest a better. And you have 9 stocks. Why don't you move your that holding of Mojo stocks, convert into model portfolio? Because model portfolio always consists of a Mojo stock. You use model because in model portfolio we do advise exit, sir. In Mojo stock you have to monitor on your own. Okay, because there are some stocks which may not be like example Coforge, which is not a Mojo stock. It exited Mojo stock. We advise exiting from the model portfolio also. Why? Because it triggered that fall from high criteria. So we advise exit from that. Now sometimes we do hold a company which was a Mojo stock, no longer a Mojo stock, but we continue to hold that company in a model portfolio. So I think the best way for you, Mr. Parekh, would be to follow our model portfolio.
Okay. Yeah. Moving on to the next question. This is by Devangti Paul. What's your assessment on aluminium price and demand currently?
We do believe that aluminum prices will remain extremely robust because of China is the second largest exporter of aluminum in the world. Now with sanction supply chain issues, it would do extremely well. Okay, if you look at the inventory on the LME, that is the London Metal Exchange, it has been falling. Demand for aluminum will remain extremely robust, and especially when the crude oil price is surging. Why? Because there's a need for now the green energy, and people will basically accelerate that green energy even if they have to pay little higher prices for products like aluminum. So, and this is not that we are saying right now. In last 1 month or so, because of this Ukraine and Russia war, we have been maintaining this trend for quite some time. So we are extremely bullish on non-ferrous metal, including aluminum. And if you look at some of our Mojo stocks, come from the aluminum sector. So we are extremely bullish on aluminum.
Okay, so I can see a couple of questions come on this particular thing. It's about Bharat Electronics. Some of the investors says that it was a Mojo stock, but exited the list in quite few days. Any particular reason for this? Is it only due to technicals?
It's only, let me clarify. We have not exited from Bharat Electronics in the model portfolio. We have not. Our investment committee continues to hold this company. The moment score goes below 70 for any company, that company loses its Mojo stock status. Why? Because it's no longer a buy, it is a hold. So fresh buy is not recommended, but that does not mean that whatever you have bought, you are supposed to exit from that company. So please continue to hold Bharat Electronics. We have not exited from the model portfolio. I hope that makes it very clear.
Yeah, and I think another a particular confusion among investors is that did you remove the stock from Mojo list or did it go out automatically? Because you said you continue to keep it in the model portfolio.
Sir, Mojo stock happens automatically. The moment score of the company goes below 70, it loses its Mojo stock status. Period. It happens automatically. There is no manual intervention that happens. But in model portfolio, our investment committee decides whether we should continue to hold that particular company or not. And based on that, we decide whether we should exit or not. So Bharat Electronics, it's no longer a Mojo stock, but we continue to hold this company in our model portfolio.
Okay, this question by Shashank on the auto industry. He says the auto sector is not doing well. Any chances of recovery in the next 2 quarters or near term is very faint due to the current situation and as well as inflation. In such cases, can we move out of Mojo stocks from the auto industry like Tube Investments or LG Balkrishna and switch to other Mojo stocks of better performing sectors?
Okay, that's a very good question. But before that, I just saw one comment which says my audio is very weak. Is it am I audible?
Yes, I think you're audible, just slight echo. But you're audible. It sounds fine. If anyone still has a problem, they can drop it in the chat box.
Yeah, okay. So we'll figure out. So we have a studio also. We have created the video or studio, and very soon we'll move to the studio which has a soundproof and other things. It's just that it's under what we call. We are still that equipment, other things has not been done. So we'll do that. Okay. Now coming to your question about auto sector. So auto sector, yes, because of what has happened in Europe, Ukraine and Russia crisis, some demand output has taken a beating. There is increased the supply shortages, and due to that, recovery may take more time than what was expected in the auto sector. So that's one. Uh, our sense is that auto sector, like if you remember when I did Equity Outlook 2022, I did mention that auto and auto ancillary sectors should do very, very good. A lot of people are saying my voice is low. I don't know why actually, because I'm okay. So I did mention that Equity Outlook 2022, auto and auto ancillary industry should do extremely well. We continue to believe that it should do well. The only thing, it may underperform for some more time before it starts outperforming. So what was expected to happen by December 2022, it may happen by first quarter of 2023 or something. So that's one. Now coming back to your questions about tube investment, LG Balakrishnan, we continue to believe that this company can create a lot of wealth for the investors, and hence we have not moved out of those companies. For some reason, we believe that this company will underperform. We will advise you to exit. You don't have to worry about it. So right now, no need to panic. Please continue to hold these two companies.
And speaking about tube investments, Captain KS has asked this question. In one of the webinars, you had stated that tube investment is likely to launch commercial vehicles in March 22. Is there any update on that?
Sorry, let me correct you, sir. I never said March 2022. I said first quarter of FY 2023. That is April to June 2022. And I think they are going to launch that product, electrical three-wheelers, one for passenger, one for cargos, and one for last mile connectivity. They are going to launch it by first quarter of 2022. That's the latest update that we have, sir, on tube investment.
Okay, I'll just move on to the next question by Mr. Sushil Bali. Sunil ji, is it a good idea to sell loss-making stocks and buy them simultaneously to reap benefits of carrying loss to the next 8 years and offset the same with future profits? Could you comment on this?
Sir, as a practice, I don't do personally also. It's Marcus Mojo as an organization, we do not encourage, for the very simple reason. Sometimes, because I do understand where you are coming from, I think the best person to answer is your chartered accountant. My only worry sometimes what can happen, you move into one company, you move out of another company. That you move into that company, you move out of that company, you book losses in anticipation that you will be able to buy the same company, either at the same price or the lower price going forward. That may not happen because the market has been extremely volatile. So the reason why you want to get out of that company because of saving tax, my advice would be not to do it. Sometimes you will go right, but many times you will go wrong. And hence, it's not a very wise decision to do that. My advice would be not to do that. But then anyway, you can consult your CA and take a call on that.
Okay, one of the questions from an anonymous attendee. With India planning to get cheaper oil from Russia, why do we still think oil stocks would do well?
So because of the oil prices in the international market. So, hello, Russia is not going to meet 100% of our requirements, sir. They will meet only some portion of our requirement. And today, again, the price of crude has again moved above $100 per barrel, which it has come down. So that's the reason. And if you look at YTD, so okay, we all get little perturbed by what happens in 1 day price movement or 1 week price movement. But if you look at YTD, that is in 2022, in first 2.5 months, the price of crude oil has gone up by almost 40-45%. So that gives you an idea that what kind of revenue jump, as and when these companies are going to declare for March quarter and beyond that, they are going to be substantial. Now coming to the little longer term horizon, well, what happens? Let's not forget talk about 1 quarter. But when you look at even for the rest of 2022, all the reports suggest that that crude oil price will remain very, very firm. And that's not I am saying. If you look at EIA from the US or you read some of the reports from Goldman Sachs, JP Morgan and so on and so forth, they all are suggesting that price of crude oil is going to remain very, very robust in 2022 because of supply disruption, because of demand. Now, there's one worry that has come up, which looks like more like a temporary, that China has announced 2 cities lockdown. And due to that, the demand for the petrol and diesel is going to remain a little low. If that is so, there was temporary demand shortage, temporary curtailment of demand would be there. But is it going to be a long term? The answer is no. And hence, we remain invested. For some reason, if our data suggests that these companies are not going to perform well, we will advise exit from those companies. Jason, is it really bad? Because I can see some people suggesting that my audio is really...
No, it's much better now. I think there's a bit more clarity on that.
Yeah.
Moving to this question by Mr. Mani Bhushan. NSE started US stock trading in India. Would Markets Mojo also support subscribers to invest in US stocks with Mojo score and recommendation?
Yes, we discussed that yesterday. We are going to see, only our concern is that liquidity on those companies. So once we reduce the liquidity, I think we should be able to do it. So just wait for some time, but we'll definitely work on this because we anyway have an IP on the US-based stocks. The only thing we need to do is that we need to look at the liquidity. We have been informed that liquidity is extremely low on some of the stocks which are allowed by NSE on the US stocks, and we don't want our investors to go and buy those companies and they are not able to buy. And even if they try to buy, the price goes up substantially. And when we advise them to exit from that companies, they are not able to exit, and due to that more number of shares, the script price comes down. We don't want that thing. So yes, we will do it provided our liquidity permission allow that. That's what we committed yesterday. Mohit also committed yesterday in the webinar. We are working on it, sir.
Okay, this question by Mr. Krishnan. What's your view on TCS? And also, do you think this would be the best company in the IT sector currently?
So, sir, as I told you, TCS continues to remain a buy in our system. We continue to hold TCS in our model portfolio for more than 2 years. So, and we have not exited from that. Now, what has happened? TCS has announced buyback at 4,500 rupees. Now that will become a new benchmark for the company to do. So what we have observed historically, that in 3 to 4 months, the TCS current market price goes above its buyback price. It has happened in the past, and we believe that it can happen in the future also. Number one. Number two, if you look at the complete demand outlook for the IT software, it is extremely robust. And there are reports suggest that US is going to double their tech spending in next 5 years as a percentage of your GDP. So the GDP will also grow, and percentage of IT spending on company spending on IT will also double. The percentage will double as a percentage of GDP. And that's going to give a lot of opportunity for the Indian IT service sector. And if that is so, ITC can benefit from that. The only issue, not only ITC, but each and every IT companies are facing the supply side, where the number of employees quitting the companies are a little higher side. This problem may continue even for the March quarter and may extend to the June 2022 quarter also. But we are getting a sense that post-September, this issue will start getting resolved. Why? Because some of these IT companies are getting recruitment from the freshers. They're making them employ job ready, and hence that will reduce some amount of supply side pressure. So we are little bullish on IT as a sector, and we do believe that TCS should do well. And that's one of the reasons we continue to hold TCS in a model portfolio.
Okay, going on to the next question. This is by Mr. Shri Vignesh. What's your view on Fed rate increase and due to inflation of 40 years high? Some study says there's 33% chances of recession in US as well.
Sorry, come again.
What's your view on Fed rate increase? And due to inflation of 40 years high, some studies suggest that 33% chances of recession in US are possible.
Yes, you are right, very much right, sir. And if you remember, yesterday we were discussing about that R word has started coming in the discussion. Recession people are talking about. Now, assume that there is a recession in the world. Will India not get impacted? Of course, India will get impacted. There is no doubt about it. But what we have, what we believe, and that's my personal opinion, not necessarily that Marcus Mojo's opinion, because Marcus Mojo does not have any view on the economy. But what could happen is that India being the what we call demographic dividend, because of very prudent policy being taken by the Reserve Bank, reforms undertaken by the government of India, China plus one policy, I think India would get less impacted because of the, in case of the recession has to happen, of course India will get impacted, but we will be the bad among the worst kind of a scenario. And due to that, a lot of investors, especially FI investors who have sold very heavily in Indian market, may come back very strongly to Indian equity market. Why? Because of sheer growth that Indian economy is going to report. And even if you look at the worst of the worst, GDP growth for 2022, it has been in excess of 7%. India, for some reason, if the recession has to happen across the world, that 7% may become 6.5% or maybe become 6%. But India would continue to be the fastest growing economy in the world. And hence, we don't see much of a challenge. We have maintained in the past, and we continue to maintain even now, that Indian market will give you the best equity market I'm talking about, best returns to the investors in 3 to 5 years. The kind of wealth that Indian retail investors have made in last 20 years, they'll be able to make similar kind of returns in next 3 to 5 years. So my suggestion for you, sir, don't get too much caught up by what happens to the Fed, what happens to the war, what happens to, because eventually market will talk about the fundamental of that particular economy and fundamental of that particular company. And if you are invested in the right country at the right time with the right allocation, you would do extremely well. Let's look at 2022. What is happening in 2022? If you'll be surprised to know that in 2022, Indian market is among the best performing market as compared to US. While Nifty and Sensex are down by nearly about 2%, the Nasdaq is almost down by 17 to 18%. S&P finance down in double digit. Dow is also down very close to double digits. So we have outperformed the broader market very decisively, and that something can happen even going forward.
Okay. This question by Mr. Kevin. My third tranche is due for investment on 21st March in Mojo Infinity. Based on the expectation that market will have time-wise correction for 2-3 months more, can this third tranche be broken down further into 2 installments?
Sir, no. The very fact, Kevin, we decided to invest in 3 installments is the same reason, because we wanted to ride out the market volatility. Now you are making an assumption that market may remain sideways or may go down. That's the reason we are suggesting, can we not further divide into 1/3 into 1/3 further? That will not be right strategy. And Kevin, anyway, you are not come to the equity market for 1 month, 3 months, and 6 months. Since you have come for the long term, this doesn't matter. So please rest assured, please go ahead, and as and when we ask you to invest, please go ahead and invest. Do not try to time the market. We time and again we advise investors, what is important is a time in the market, not timing the market. So I hope, Kevin, you would please follow our advice. We will follow our advice in a very disciplined manner, and we'll invest 1/3, remaining 1/3, as and when we ask you to invest that.
Okay, this question by Mr. John. Thanks for your guidance, Mr. Sunil. Markets Mojo has been maintaining that from May to June, the markets would remain very choppy. Given the recent fall and the bounce back, can we now understand that the healthy correction that we were expecting is behind now? Can we see a robust movement from now onwards?
Sir, it's a very good question. Our sense continues to be that Nifty, Sensex will remain volatile. I don't think we have come out of the woods. Market Nifty can again go back to 15,000 to 15,500 level. This is our assumption. Whether it will happen or not, we don't know. So we do expect market will be a little choppy, sir. That's what our sense as we speak. And the reasons are very obvious. There could be news flow coming in from the Ukraine and the Russia, Europe. Someone was mentioning about probability of recession. Fed is going to come out with the rate decision making on the rate hike. Not only that, they will also talk about how many rate hikes that can take place in 2022. Also in India, we all know that there has been some slowdown because of high inflation. So if the commentary has to go a little soft, market may also give up some of the gains. And in next 20-25 days, also result season will start of the March quarter. And that could also impact the market sentiment. So there are many events that are there in the market which will keep market a little volatile. So we do expect the worst is not behind us. There could be more further correction. There could be more volatility. And as we mentioned in our equity outlook 2022, we continue to believe the first half of 2022 will remain a little challenging for the investors. And we have just covered half of first half. The second quarter is still pending, and we should expect some volatility there also.
Okay, moving to the next question. This is by an anonymous attendee. What exactly happened to Andhra Petrochemicals even after giving very good results quarter after quarter recently?
What happened to that company, sir? We were holding Andhra Petro in our model portfolio, and we advised exit. The reason we advised exit because the fall from high criteria got triggered, and our system suggested that this company will underperform going forward. And that's why we advise exit from that company. And rightly so, because company did underperform post our exit. So that's what has happened, sir. So when we look at the score of the company, any company, not only Andhra Petro, we look at the quality, valuation, recent quarterly financial performance, and the technical. And based on these 4 dots, it does give an indication that this company may underperform. So sometimes the result may be good, but not result in that result. Good result will translate into capital appreciation. And at the same time, the bad result not necessarily that it's going to translate into losses. Now, if you look at Andhra Petro, the score of the company, the CFT score that we compute was 44 for the quarter ended September, which substantially came down to only 24 for the quarter ended December. So that's a kind of fall that we saw. So yes, the number was good, but if you look at the trend in Andhra Petrochemical, the trend has shown little downward trend. So that's what my take is on the Andhra Petro side.
And this question by Mr. Venkata. In this year, for the first time, FIIs are net buyers on cash. So I feel the correction is over. What do you have to say on this?
So I did respond to that question. Someone asked me that is the worst behind us, and I did mention. Now, if you look at the pattern of FII, every month the sale has been higher than the previous month. Just to give an example, in the month of December, they sold 19,000 crore of equity. In January, that got increased to 33,000 crore. In the month of Feb, that increased to 35,000 crore. In the first 15 days, I don't have the data with me because I was busy with some other stuff. I did not check it. But first 15 days, it is 41,516 crore. So it's very difficult to say the selling has stopped and they will start buying. We don't know. But having said that, if you remember in my equity outlook 2022, I did mention that FII will invest higher amount of money in the equity market in 2022 as compared to 2021. So FIIs has sold me about 1 lakh crore in the first 3 months of 2022. I'm very confident. I don't know whether that happens from tomorrow, day after tomorrow, and so on and so forth. but I'm very confident in next 9 months, that's not 9 months, 9.5 months, FII would pump in more than 1 lakh crore in Indian equity market to make them a net positive investor in the Indian equity market. So I buy your argument, I buy your logic, but will it happen from tomorrow or has it changed for better? It's too difficult to say, sir.
Okay, this question by one of the investors, and I think a lot of investors will benefit from it. How does one exit the model portfolio? As I have 3 model portfolios currently.
So you want to exit from the model portfolio. You have 3, and if I got you right, sir, you want to from 3 you want to make it to 1 model portfolio, if I got it correctly. And I assume also that you are right now following all 3 model portfolio. So, sir, if that is so, in our model portfolio, we do have a reduced cash option. Please use that as an option to reduce your holding in that model portfolio which you do not wish to follow out of 3. Okay, and that's the best way you can manage and get out of that model portfolio.
Okay, a question by Mr. Maheshwari. There are talks in the market of Parag Parikh to add flexi cap funds. Do you think it's a good one to add?
Sorry, we will not be able to comment because we don't know what that fund is all about. What we have also observed is that any mutual fund scheme over a longer period of time, I'm not commenting on Parag Parikh, I'm giving in general, normally perform in line with the overall market. Normally. Why? Because by compulsion, they need to invest in more number of companies. Number 2, they need to keep some cash portion to meet any redemption and so and so. Plus, there are expenses that you need to end up spending money of about 1.5% to 2%. That all impacts your long-term returns from the mutual fund scheme. So, on the other hand, if you look at our model portfolio strategy, we take a very concentrated bet. We take a very concentrated bet, and we invest only in 10 stocks, 12 stocks, and 15 number of stocks. Okay, and due to that concentrated portfolio, we generate much higher alpha as compared to any mutual fund scheme. And this is what we have our model portfolio demonstrated time and again. But if you feel Parag Parikh flexi cap is going to introduce, and if you feel comfortable, good luck to you. You can go and invest. We don't comment on individual mutual fund scheme, but we do get a sense that mutual fund industry, on an average, has been underperforming the broader analysis.
Okay, Abhinav has dropped a question multiple times. He's asked if the 2199 offer would be at least extended till the end of the month. Is that possible for him?
21,999?
Yes, till the end of the month.
Yeah. See, it's very difficult to, but right now it looks like, yes, we may continue till, because Mohit was suggesting yesterday that we may extend till 31st March, and from 1st April, our price will go up. So, yes, we may extend till, but having said that, please do not blame us if we change our offer. Please do not blame us. Today it's available, whether it will be available tomorrow, I cannot say with certainty. It could be yes, it could be no. If our management decides to change the prices, we may do that. So I will be very difficult for me to commit. If you really like the product, if you really want to create wealth, please avail the offer immediately without any delay. And if you want to wait till month end and avail at that point of whatever the offer is available. That time, if this offer is available, you can go for it. If it's not available, go for other offer that is available. But point is that you need a financial advisor in this market. If you don't do it, I'm afraid you will lose money big time in the equity market. That's what my request. Whether you follow Markets Mojo or you follow any other experts you believe in, please take advice, because market is going to remain extremely choppy, is going to remain extremely volatile, and because of that fear or the greed, you will end up taking a wrong decision, which is going to pay very heavy price on your portfolio.
And I think one of the most favorite questions asked by a lot of webinar attendees, could you throw some light on ITC as a Mojo stock?
Yes, sir. our investment committee has approved ITC as a Mojo stock. And the reason is very simple, because our IP does suggest that the ITC can outperform from this level. So despite uh, uh, FMCG as a sector not doing well, we do get a sense that ITC can outperform, and it has actually, after becoming a Mojo stock, it has performed well as compared to the broader market. So right now, yes, we do believe ITC can outperform, and hence it's a Mojo stock. So I think ITC become a Mojo stock on, I'll tell you, on 11th March. Since then, it is up by 2.71% versus BSE 500, which is up by 1.7%. So we do believe that ITC can outperform.
And Mithun has put a follow-up. What is the actual reason for ITC coming in? Is it purely technical based?
So remember, sir, no company can become a Mojo stock if the quality of the company is not good or excellent. So ITC did satisfy that criteria of a good or an excellent quality company. Okay, so that's one. Today, as I speak to you, IT is an excellent quality. With the same way, the valuation of the company is also very good in the sense it's not very expensive. It is fair valuation. The company financial performance has been constantly improving and with a positive trend. And as you rightly said, technical trend also turned bullish, and that allowed us to make ITC as a Mojo stock with the score of 82.
This question by Imtiaz, and I think I've seen this question in few webinars. Dear Sunil sir, will Markets Mojo also plan to go public and issue an IPO soon?
So Imtiazi, at this point of time, we are not working on taking this company public. In fact, we met one very big HNI investors, and his request to us, can I get a shares before you people go public? Okay, so right now we don't have any plans to go public. Yes, we will go public, maybe next 3 years, 4 years, 5 years, depending upon the need. But at this point of time, no one in our Markets Mojo is working towards making this company public. So it's not that we have asked merchant banker or we have asked someone to do this kind of a work. So there is no plan.
Okay, just going back to one of the follow-up questions on ITC. When ITC traded at 199, you did not find any value, but at 235, it is attractive. Is there any logical reasoning to this?
Yes, it's very much logical reasoning. So if the price is the only consideration to decide whether this company is good or bad, then I'm afraid that's not the right way. That may be a very primitive way to look at the company. Many times you would have seen many people recommending sell at the lower price, and the same company, not Markets Mojo, many foreign brokers also recommending at the high price, because market is a function of what the future outlook for that company. At 235, we believe that company can create wealth for the investors, and hence we are recommending as a buy. At 199, we did not realize or did not feel that company can create the wealth. Am I right? So that's why we did. Now the question that you should be asking us, will this company be able to create wealth from this level or not? And if the answer is yes, how does it matter whether you bought at 199 or 235? What matter to you is that whether this company, after becoming a Mojo stock, outperformed the broader market or not, created wealth or not. And if the answer is yes, you are better off by investing in ITC. But now if you say that we should always be able to recommend scrip only at the bottom of the price in terms of buy, and we should be able to advise you sell always on the top of the price, practically not possible. We do not claim we will be able to do it. We have never been able to do it in the past, nor will we be able to do it in the future. But what we can promise you is that despite not able to buy at the bottom of the price, despite not able to sell at the top of the price, we will outperform the benchmark very significantly. We also endeavor to be the best performing among if you to compare with any AMC, we would have hands down they outperformed their benchmark or their performance or any PMS. We have demonstrated that in the past, and we are very confident we'll be able to demonstrate that in the future also.
Okay, taking this next question. This is by Mr. Venkat. I save up some money every 2 months for investing. Can I invest in the model portfolio at every 2 months, or should I pick some other strategy?
Every 2 months, yes, we do have an add investment option where you can apply and you can do add investment option every 2 months. That's fine. There's nothing wrong with that. My only question to you, sir, do you have the money and you are basically trying to time the market? Then my advice would be do not try to time the market. Maybe you can divide one third kind of a stuff of your investment every month. But you don't have the money and hence you expect money to come by every 2 months, then yes, what you're doing is can be done. So.
Okay, this question by Mr. Srinivas. I am an Infinity customer. Is it a good idea to invest more by pledging some of my portfolio since the market is down?
No, sorry. Can I
add more into my portfolio by pledging some of my shares in the portfolio?
No. Pledging is not advisable, sir. We tell 3 things to the investors, and that we have repeated in the past, we'll repeat again in the future also. Number 1, never borrow money and invest in the equity market. Number 2, never bring emergency money to the equity market. Why? Because sometimes you may need funds, emergency fund, and the market is not trading at a healthy value. For example, assume that you needed money urgently in March 2020 and you will be forced to get out of the market. Why? Because market is trading at a very lower value. So we always tell, do not park your emergency money to the equity market. Number 3, whatever amount you commit to the equity market, you invest for minimum 3 to 5 years. If you do that, you should be fine with this. So my advice to you, not only to you, but everyone, it looks tempting to pledge your shares and put in the money in the equity market. But sometimes if the market behaves very erratically and goes down, your lender will ask you for the higher pledge. And for some reason, if you are not able to meet that requirement, they will sell your shares in the open market and you will incur huge losses. So my advice is no.
Okay, and Pushpaben Dave from the YouTube chat has a particular question. He says that if you're unaware of mutual fund returns, all mutual funds have given 15% CAGR over the last 5 years. I think you're lying over here.
All mutual funds given CAGR returns of 15%. Okay.
Yeah, the last 5 years.
So,
anything so?
The question.
He thinks you're lying when you said that mutual funds are not perform. You perform better than mutual funds.
Okay, sir. Okay, so that's a very fair question. So let me just. Can I scale my screen if you don't mind, sir? So I am lying. Okay. Assume we'll go with that assumption that I am lying. Okay. I'm on a Google page. Okay. I'm just putting a Google search. You can also put it. Okay. I'm putting mutual fund underperforming their benchmark. Okay, sir. Can you see this article which is published by Mint? It's not, I have not published, so I assume that I am lying. What it says, 81% of the large cap funds underperformed their benchmark over last 1 year, ended December 2020, and almost 67% in mid and small cap and 65% in ALSs. So this is the one, the article that you can read. Okay. Now there is one more study which has been done by S&P, which is this one. I'll also explain you. 3rd December 2021, around 50% of equity mutual fund beat their benchmark. Sunil Damania is lying. Economic Times is also lying. 50% only. That means balance 50% has underperformed the benchmark. Sir, you can also do Google search. Yes, I am lying. Then Mint is lying. Economic Times is lying. And some of the people who have done the analysis, they are also lying. So sometimes, sir, our perceptions are different. The reality is different. Okay. So there is another article, active mutual funds again failed to outperform the benchmark. This article is written by Financial Express, 8 April 2021. Equity mutual fund underperformed benchmark in last 1 year, 25th March 2000, Hindu Business Line. So there are many articles you can do Google search and you will get the answers.
Okay, moving forward, we got this particular question by Mr. Niyal Shah. What's your view on sugar sector and mainly for the stock Balrampur Chini?
So we do believe that, so our view was not so great about sugar sector, but what has happened, the sugar prices in the international market has started moving up. That's one. So secondly, when the crude oil price goes up, it benefits crude oil, ethanol, sugar companies. Am I right? And due to that, we do get a sense now the sugar companies should do very well. Previously, we were believing that only few companies will do well, but right now it looks like that sugar as a pack can outperform the broader market. And company like Balrampur Chini, you can continue to hold some.
Okay.
Is the customer convinced now about that I am lying the data, or is he still has a need some more points?
No, not yet, but it's on YouTube, so there might be a 20-30 second lag. So you might be
still. If you
still.
still don't agree with me, na, sir, please, I'll be more than happy to prove wrong. So I may not lie to you. I may be ill-informed. My job is never. So in my career, I have one thing I always remember. I may be ill-informed, but I will never try to misguide you, or I will never try to lie to you people. Okay, sir? Yeah.
Yeah, Shyam Sundar has given a particular comment on this. Don't you think it's not fair to compare a portfolio of 10 to 15 stocks with a 50 plus stock mutual fund? High risk, high returns always goes in hand. What do you think about this?
Sorry, so your question itself has an answer. No? That's precisely the reason I'm saying you should not be investing in a mutual fund. Okay, you have a 1 lakh rupees to invest. What is your objective should be? Whether who can give me higher returns on that 1 lakh? You have options. You can invest in mutual fund, or you can invest in a model portfolio. What is your objective is to create more wealth for yourself. Now, very fact that you are saying that mutual fund cannot outperform, then why do you want to put money in mutual fund? वो आपका कोई सगे वाला तो है नहीं, कोई चाचा भतीजा तो है नहीं कि आपको उसको पैसा देना है. So then why you want to do that? And top of that, he's also going to charge you 1.5% fees to underperform the benchmark. How does it make a sense? So your question itself is an answer. Yes, what you are saying is right. They will underperform by nature. If you look at by design, they are going to underperform.
Okay, so the investor actually replied. He said that there are other mutual funds like Axis and SBI who have done well. Do you have any opinion on that?
Sir, I don't want to comment. I'll talk in general about the industry. Okay, and they have, so some company may do well, some mutual fund scheme may do well for some period, but not consistently. Am I right? And if that is so, you need to have a great insights. Okay, in 2022, which mutual fund scheme will do well? Because what we have observed, a scheme that does well in 1 year, they normally underperform the next year. Now, if you have that kind of an insight, कि 2022 में ये अच्छा चलेगा, 2023 में वो अच्छा चलेगा, 2024 में वो अच्छा चलेगा, please go and invest that. Otherwise, I would suggest not to do that.
Okay, moving forward to the next question. This is by Rajendra Sharma. Does NSDL hold my stock in physical certificates also?
Sorry.
Does NSDL hold my stocks in physical certificates? I'm worried that in case of a cyber attack and all this data gets wiped out, what would happen then?
Sir, I'm not a cyber expert and nor I have a clarity of thoughts on this, but I'm so sure they would have a backup server. So for some reason, if some kind of a cyber attack happens from the one server, they would have another server from where they will be able to take out the data. So your fear, I believe, is little out of the place. But nonetheless, I think you should ask the people, those who are expert in this. I'm not a cyber expert, but I'm so sure the way you are thinking, even NSDL would have thought about it, SEBI would have thought about it, Ministry of Finance would have thought about it, and they would have created a carbon copy or a mirror of on other servers, so not only in one place. on various parts of the world. Why? Because there could be a, now you talk on cyber attack, there could be also a natural calamity. Okay, and the data can get lost. So what, as a matter of policy, what the good organization does that they create the replica on the various geographical spread, so that if something has to happen to one particular region or to one particular server, the data doesn't get lost and gets stored in other. So I don't see, of course, that's what you're saying is a possibility, but impact of that possibility or the negative impact of that, I believe is less than 1%.
Okay. Also, Mr. Bangadia, you dropped a query on a particular subscription. I've asked the feedback team to check that, and we'll get back to you as well. One of the questions asked by investors is that BSE has given tremendous return and beaten all benchmarks.
Which one? Which one?
BSE.
BSE, huh?
Yeah. Any particular reason why Mojo missed the stock and couldn't recommend it?
So we always, our investment committee always look at the various aspects of the company to recommend a stock. Now, to recommend a stock, the company has to have a score of above 70. And today, as I speak to you, the score of the company is 64. So we cannot recommend the whole company as a buy. So that's the reason we have not recommended. Now, having said that, yes, we may have missed that company to recommend. But remember, we cannot claim, we are not claiming also that we will always be able to recommend each and every best performing company. But out of top 10, we will be able to recommend 7, 6 as a buy to the investors. Balance 3, 4, we may miss out. And that's how it works. But BSE anyway, our score is 64. It cannot be recommended as a buy. So.
And this question by Pathway, he's asked it a number of times. My model portfolio has Grasim. If the Mojo score falls below 61, should I go for switcher?
Sir, Grasim is also stock of the month. We also hold Grasim in our model portfolio. So my suggestion not to use switcher. Please continue. If you are a paid member, we will tell you when to exit from Grasim. Why? Because all stock of the month we personally review, and we'll tell you when to exit from that. So if you are a paid member, don't get out of Grasim. We will tell you when to exit. We continue to hold Grasim in our model portfolio also.
Okay, one of the questions asked by an investor is, what's the process of identifying Mojo stocks and how frequently are you doing this process?
Sir, our process runs on a daily basis. So what it takes to become a Mojo stock? Number one, the score of the company has to be 70 and above. Number two, the quality of that company has to be good or excellent. So there will be many companies whose score may be above 70, but they are not a Mojo stock. Why? Because the quality of that company is either average or below average. If that is so, we cannot make it as a Mojo stock. Number three, to become a Mojo stock, that company has to be in top 20 in that respective market cap in terms of score. And number four, this company has to approve by our investment committee. So if it satisfies the first three conditions, then it will go to our investment committee for an approval. And if our investment committee approve that company, then only it can become a Mojo stock.
Okay, and this question by Mr. Kalai, I think he also spoke about sugar stocks, but he says that there is no particular sugar stock in your Mojo stock section. Would you consider entering in some of these stocks looking at the current scenario?
So you are right, sir. We don't have any sugar stocks as a part of Mojo stocks, but we do own 3-4 sugar stocks in our Mojo Infinity portfolio. There's one company that we do hold, which is from sugar sector in our model portfolio, is AID Perry. See, as I was explaining to the previous attendee, to become a Mojo stock, the stock has to have a score of 70 and above, quality of good or excellent, and it has to be in top 20 in the respective market cap. Then only it will come for investment committee for an approval. I'm afraid none of this criteria is getting triggered when it is coming for an approval.
Okay, Mr. Ashish has asked a particular question. He's asked your view on Bank Nifty and also on SBI, and also if any other banks would do well.
So this is my personal opinion. Markets Mojo has no view on the sector. Now, my personal view is that Bank Nifty may continue to underperform going forward. The reason is very simple. The complete landscape of a banking is undergoing tremendous change. There are many fintech companies that have come up and that are giving a very serious competition to some of these private sector banks. And if you look at some of these private sector banks who are commanding a very rich valuation in the hope that they will grow very handsomely. Somehow they have not been able to live up to that expectation, and hence they've started underperforming the broader indices. Who could have thought that Kotak Mahindra Bank would have underperformed in 2021? But the fact of the life is that they did underperform. HDFC Bank is underperforming in last 1 year, 2 year, 3 year, and 4 years. Now coming back to your question on SBI, can it outperform? So that's my view on the overall banking sector. See, SBI has a lot of potential to outperform, but somehow it has not been it has a very patchy performance. Sometimes it does well, sometimes it doesn't do well, a kind of a stuff. So right now our score on SBI is a hold. So what does this mean? The fresh buy is not recommended, but if you already bought SBI, you can continue to hold. That's what my advice would be.
And also, if Mr. Sunil don't mind, we are having actually an exclusive webinar on HDFC Bank, whether the company would outperform. And I think you would also be providing your opinion on that particular, the banking sector as well.
Yes,
so I'm actually dropping a link for every investor. The webinar is live on the webinar page, and you can get the link for that particular event and see us on Saturday as well. Yeah. So moving on to the next question, I've got a few particular feedbacks that the Markets Mojo mutual fund section still has scope of improvement. Do you believe in the same, and would Markets Mojo also look at adding more features into the mutual fund section?
So I 110% agree with you. We have a huge scope of improvement. It's not doubt about it. Huge scope of improvement, and I'm very sure we are working on it. As yesterday Mohit also suggested, we are working on the model portfolio on mutual fund. So we are working on that, and we will delight you, sir, in mutual fund. I agree with you. We should have done more. We have not been able to do it because there are other projects that is holding it back. It's our promise. We will delight you. So if you remember, Mohit and I did one webinar about suggesting you what you should expect from us in 2022. And if you remember, one of the items that we discussed about is a mutual fund. And yes, we will delight you. We'll come out with a very different IP on mutual fund and we'll delight you. I agree with you. A lot needs to be done, and we are aware and we are working on it.
Okay, and also a few investors have asked about the broker onboarding process. The broker onboarding process, would you also be having the broker integration so soon?
So it is working. See, there are some technical glitches that we are finding it. So our team is working on it, but they have found some technical glitches that they are working on it. Now it can happen tomorrow also. We are able to find solution tomorrow also, or it can take 7 days or 10 days also. But we are working on it. So please bear with us for maybe 15 days or so. There are 3 things our tech team is working on. One is that rating on insurance companies. Second thing, notification through WhatsApp, and number 3 is a broker integration. 3 things our team is working on it. Very soon you'll hear from us.
Okay, there's one particular stock. I think Mr. Ajay Sharma has asked this. You have any view on Sutlej Textiles?
Which textiles, sir?
Sutlej Textiles. Sutlej, I'm sorry.
Yeah. Okay. Let me see. I don't have any personal view, so I'm just looking onto the Markets Mojo dashboard. Sir, you can, I think, continue to hold Sutlej Textile. You can hold Sutlej Textile.
Yeah, and also I can see 2 to 3 queries on the technical calls. Any reason why technical calls were shut on Markets Mojo?
Sorry.
Some of the investors have written if any reason that technical calls were shut on Markets Mojo.
Yeah, the reason is very simple. The market was extremely choppy, and some of our calls were not living up to our expectation in terms of wealth creation. As you know that if something that is not working, we do not hesitate to stop it. And as Mohit was saying yesterday in the webinar, very soon we'll start working on this. Now our calls have started working on, we have tweaked our logic further to improve the performance. So since it was not working, we have put it closed, we have closed down, we rework on our logic. And now very soon, I think it started working. Jason, started working from today?
I think there are fresh calls today if you go on the website.
There are fresh calls from today. So just a thing.
Yeah. One of the questions by investor Mr. Venu Madhav. Could you provide your opinion on Reddington? It has been underperforming in the last 9 months.
Yeah, so Reddington India we continue to hold in our model portfolio in our Mojo stocks also. My request to you, sir, please hold on. We do believe, see, the very funny is survived for 8 months and 20 days. Am I right? It did very well in 2022. Why? Because while the oil market is down, this company is in green. So the reason we have continued to hold this Reddington India model portfolio because we do believe that this company will and can outperform. So please continue to hold.
Okay, we've got this question by Mr. Girish. Is there any logic that you're adding more stocks from the PSU sector nowadays?
Is there logic in which sector? PSU?
Yeah, you're adding more stocks for recommendation from the PSU sector.
It is very simple. So whenever there is a risk-off strategy, the PSU as a sector does very well. Whenever there is a risk-on strategy, the PSU sector does not do well. Now, some of this PSU company that become as a Mojo Stock are from the commodity cycle, whether it's a National Aluminium, whether it's an Oil India, and so on and so forth. And the outlook on those sectors looks to be very promising. If that is so, this company should do well, and that's why they become a Mojo Stock. That's the only logic. And they do satisfy the criteria of score above 70, quality good or excellent, and they form in top 20 in terms of score in the respective market cap.
Okay. Moving forward to the next question. This is by Mr. Shyam. He says model portfolios change invariably on a daily basis, and it is not easy to comprehend computation of portfolio returns over multiple time periods. Could you share historical data of your portfolios, and also how do you compute these returns as shown by you?
So for us, each and every model portfolio is separate for us, because every day so you are not supposed to keep changing your model portfolio based on new stuff being recommended. You create one model portfolio on our website, and it is our promise that we'll suggest you what needs to be done with that model portfolio, when to exit from any company that you are holding in model portfolio. And once we advise exit, we will tell you which new company you need to get into. It is our promise. You don't have to do that. Now your question is that how do we monitor? Because every investor would have created different portfolio on different day. Your point is very valid. So what we do, every Monday we have our leadership meet, and in our leadership meet we look at on each and every day if the investors come, how that portfolio is doing well. Okay, and not only for 1 month, 3 months, we take this performance over a number of months, and we also capture which is the best performing mutual fund of that particular one and what is the worst, and we also put down the value of that performance. So okay, I have something with me. I'll just share with you. This is not for your eyes, but since you people have asked me, I'll just sharing this information with you. So this is not updated, so please pardon me. So assume that you have created model portfolio. You came and created in January 2021. 100% of the portfolio is outperformed. 100%. The highest return, and since you are also many of our paid members, see whether it's matching with the highest and lowest return, because your portfolio should be between these two returns. So Jan 2021, 100% portfolio, maximum returns has been 77.74, lowest has been 24.7. That's for aggressive. This is for moderate and this is for conservative. The same way, if you look at November 2020, 100% of the portfolios outperformed with the maximum return of 14.56, negative returns of 8.03. 95% in moderate and 91% conservative. So is the case with December. The one which we keep telling time and again, that July and August seems to be the sum which is not done as much as we would have loved. It's not that people are making losses. Yes, but the portfolios are underperformed very significantly. So yes, we do understand. So this is the way we track each and every model portfolio. I hope that answers your question, sir.
Sure. I'll just pick this one question by Mr. Pankaj. He says, I've got WhatsApp messages from Markets Mojo 2 times in the past. He wanted to confirm if it was an actual message or a fake number.
Jason, can you just confirm to him?
Yeah, yes, it's an actual message. You all can save that particular contact. I'm also dropping one link on the chat box where you all can actually update your mobile number. So if anyone updates their mobile number and in the future we have to send any webinar or any other notification from Markets Mojo, I'll send it to your authentic number. So you don't need to worry about that. Yeah. This question by Mr. Sanghani. For a new model portfolio, if I already have some of the stocks in my older portfolio, do I need to repeat and buy it again, or is it fine if I don't buy those stocks?
No, sir. It is fine as long as the quantity that we mentioned in model portfolio is exactly the same in your personal portfolio. If the quantity that we are recommending you buy is more in model portfolio as compared to your personal portfolio, you are supposed to buy more of that quantity. For some reason, if your holding is higher in a personal portfolio as compared to what we are asking you to buy in the model portfolio, then you're supposed to trim down to mimic the performance of model portfolio. That's what exactly you would expect you to do that.
Going forward,
people are putting their mobile number. You keep just jotting it down so that you can put it down. Yeah.
Oh yeah, it'll be saved, and also you can just go on the link, and there's a mobile number space, so you can put it there, and it'll be automatically saved in our system. Yeah. I'll just go forward to the next question. I can see this particular stock, RHI Magnesita. A lot of investors have asked whether we can add more in this particular stock.
Sir, it is a buy in our system. It has done extremely well. We are confident it should do well. And if you remember, I did one only inviting paid member, complete giving detail down about RHI Magnesita. At that time, I suggested this company is a bright prospects. So we were confident when it became a Mojo Stock, we are confident it should do well. If you want to buy, you can definitely buy. Since the script has gone up by 55% in 2022, instead of buying all the quantity at one go, we would suggest you please buy in a staggered manner. That's what we would request you. But it is a buy.
Okay, and I can see a lot of questions, actually, a lot of people commenting on the background. Are you sitting in the new office? Also, when you would be giving up the Markets Mojo t-shirts to all of us so that we could have a get-together in the office?
So, sir, this Markets Mojo t-shirt offer we were running it for some time. That offer is closed, sir. So we are not, am I right, Jason? There is no now t-shirts offer.
Yeah.
Yeah, sir, you're right. I am in the office as I speak to you. In this webinar, I'm coming live to you from our office. Yes, I'm in office.
Okay. One question about the investors. Any automobile company or ancillary companies which would benefit from the 45,000 crore PLI scheme?
Sir, right now, the tube investment which is there in our system, which is a buy in our system, LG Balakrishnan is a buy. Maybe you can stick with our Mojo stocks only, sir. These are two companies which is available. That should not be linked with the PLI scheme. That's my only request to all of you.
Okay, this question by Mrinal. This happens many times when we buy mutual fund schemes on a day. When market falls substantially, we do not get the NAV of the day. Instead, we get the NAV of the next day, which is much higher. Why does this happen? This happens even after we transfer the money early in morning for mutual funds.
So I think the best people to answer that maybe your the RT agent or the mutual fund scheme. So I don't know. So I don't invest in mutual fund, to be very frank. But the reason I don't invest because I know that they are going to either perform in line with the benchmark or much worse than that. If this is there, then it doesn't make sense. Am I right? So I don't investor. I don't know what you are saying is the right question, but I think they are the best people who can answer you, sir. I don't have any. I'm not an expert on that, and I keep suggesting investors time and again. Please do not unnecessarily invest in a mutual fund. It's not an ideal investment instrument for the wealth creation. That's what we have observed, and that's the fact of life.
Question by Anil. The returns of model portfolio are absolute returns on the current portfolio, and this does not consider the losses booked. Can you please put IRR for 3 months on the above to have a true view of returns?
Sir, all our model portfolio now will have an IRR also. So, okay, let me again take you to the site if I can do so 1 second. So I'll take you to the website. I'm taking you the model portfolio, and now you can see it. IRR is available. If it is more than 1 year. Can you see? It's all available now. So this portfolio which I created on, it's up by 72.68% versus this actual returns versus benchmark, which is up by 24.02%. Now, since it's more than a 1 year, we have calculated given the IRR, which is 59.8% versus benchmark of 19.55. So, sir, it's now available IRR in our model portfolio.
So Mr. Anil replied saying that he's requesting for stocks of 3 months and above. IRR is currently showing only after 1 year.
Only after
1 year.
Yes, sir. Sir, what is IRR? IRR is basically nothing but your returns. See, if I do IRR based on 1 month and 3 months, suppose your portfolio is down by 10%. I'm just giving an example. In 1 month, what would my IRR will show? 120%. Is it practically possible for someone to lose more than the capital? So I always tell you IRR should be used only for a period year and above. You should never use IRR for this one. Now the counter question could be, suppose assume that I keep investing over a various period of time. Even that has happened, please consider only after 1 year. So you may have invested in various installment in model portfolio, but IRR does not make sense because short-term volatility is not going to be a right picture about the IRR. So anything above 1 year you should consider. I hope that makes it clear.
Yeah, okay, Mr. Sunil, that's it with the Q&A session for today.
So once again, a gentle reminder that we have a very beautiful offer of 21,999 for 2 years. That includes everything in model portfolio optimizer, stock research on 4,000 companies, mutual fund analysis, our technical trading 80 product. Everything is included only for 21,999. This offer is only for the limited period, 63% massive discount it comes with. I'll again request my colleague Jason to drop the link so that you can avail this offer. With this, once again, thanks a lot everyone for taking time out. As Jason has requested, all of you, please update your mobile number so we can send you WhatsApp. And with this, thanks a lot, Jason, for hosting this webinar. Over to you.
Thanks a lot. I think a lot of quality questions answered today, and I've dropped the links for the 2-year plan and also the link for the upcoming webinar, and looking forward to seeing you all for